Let's go to Walmart. Reported solid Q4 results. I mean, the numbers are great. Same-store sales grew by 8.3%. And massive. It was much higher. That was higher than last quarter, much higher than 2 quarters ago. Sam's Club, which is part of Walmart, right? Big box. It's kind of the Costco competitor. Also solid. Same-store sales grew over 12%. That's a number you should look at if you own Costco. That's very, very good. I mean, 12% year over year. Holy cow. Walmart also did a great job reducing inventories, but all around, really solid quarter, solid year for Walmart. This is Q4 report of the year. But stocks do not trade on the past. They trade on what's going to happen in the future. And Walmart said that it only expects same-store sales to grow for the full year 2024. Again, they just grew at 8% plus. They said from 2% to 2.5%. That's much, much slower growth. The prices are very high. Told the suppliers they must start lowering their prices. This tells me Walmart is going to struggle to have pricing power. When you're pressuring your 100,000 plus suppliers, it's not a good sign. Like, hey, you guys are done. We're going to try to use somebody else or whatever. Your quality goes down, whatever it is, but the days of raising prices and having that pricing power are coming to an end for many, many companies. When you look at some of the biggest names where pricing does not matter at all, which is Chipotle and Lululemon, and both of those companies also reported tough quarters. Because finally people are like, all right, Lululemon, I don't know if they have cocaine in those pants or whatever. Holy cow. I mean, my daughter's into them now, but, it's like $100 for pants. It did great product. But it's just, holy cow. I mean, the prices are insane. But now, they're not seeing that massive, huge demand, which was incredible for such a long time for Lululemon, even Chipotle as well for restaurant. Like, okay, chicken and rice, I don't want to pay $12 for with a drink. Sorry. $13. You want to pay $14 for a sandwich, which I paid for at Subway with chips and a drink? Are you kidding me? These are the prices that you're paying. I just bought my mom a Mother's Day card. Or not a Mother's Day card, I'm sorry. A birthday card. Because we celebrated her birthday just recently, 80th birthday. I didn't even realize it because it was a really, really nice card. It was a nice card. It was, she loved it. It was $10 for the card. $10 at CVS. Are you out of your mind? $10 for the card? Holy shit. I didn't realize it. Like after I bought a few things there, and then I was like, and then, again, it was, time is of the essence with everything going on in my life right now. Trying to get the house done and driving the kids back and forth, getting crazy right now. House supposed to be done over a month and a half ago. It's still not done. So we're still driving the kids 4 hours a day, hour there, hour back, and then a pick out there, hour back. And now they're making friends at the new school. So they have things and they have different events. And one was doing track, one was doing gymnastics. So we're driving them on the weekends as well, which is crazy. So for me to say, I'm not paying for this and go to like another store and another store, I just don't have the time. Granted, I'm an idiot for not looking at the price. But how much more do you think these companies are going to be able to raise prices? So to me, this tells me Walmart's going to struggle to have pricing power, right? As they're telling their suppliers, hey, you know what? Enough. It's enough. Stop raising prices. Also, Walmart did not provide same-store sales guidance for Q1. They did say they expect earnings to come in at around $1.28, which was lower, much lower than the $1.35 expected. But not providing same-store sales guidance, again, which is sales that are from stores that are open 12 months or longer. And if you did this, or if you did this pre-COVID, your stock used to get hammered, at least by 5%, sometimes much more. Because investors and Wall Street, they hate uncertainty. And when you have a company like Walmart that's always providing that next quarter, that same-store sales guidance, and suddenly doesn't, it's not because it's going to be good news. It's because we can't figure it out yet. Again, uncertainty is the death of all stocks. Walmart is holding up okay and is flat right now. Again, those numbers were fantastic, and people are saying, well, this is probably conservative. They're probably going to grow a lot faster than we think, and these are conservative numbers. Maybe they're right. And Walmart has earned that with this quarter. Home Depot's quarter wasn't that bad, and they're kind of also warning and saying we're not going to see strong growth, and, Q4 was pretty weak. I mean, it looks like it's going to be even weaker going into next quarter. Walmart just reported a great quarter. It's a little bit different. But when you're looking at if you should buy Walmart here, I don't know. I'm not sure. Because what are we seeing? Walmart is doing the same thing that everyone else did. I don't say everyone else, but most companies did during earnings season. What do? They said, hey, you know what? Next quarter, next year, kind of uncertain, conservative. They're seeing consumers pull back. The company that's beating revised estimates that were lower. But you know they're going to see consumers pull back. It's why you're seeing so many companies lay off employees, especially over the past 6 to 8 weeks. Again, Wall Street loves that. They love the cutting cost aspect. But this is the last 6 to 8 weeks. This didn't happen 6 months ago. It started. But, the amount of layoffs over the last 2 months have been incredible. And companies do not lay off if they believe that business is going to get stronger going forward. They're not going to do that. They're not going to cut to this extent. Maybe some companies may, because you can get away with it because everyone else is cutting and you'd rather cut fast because you could always hire. It's a big mistake a lot of CEOs make. They wait, especially for small businesses. When you just cut fast, you could always hire. And the fact that everyone else is cutting gives you an excuse to, maybe, but still. And when you're looking at earnings season, this was not a good earnings season. We're down over 2% in earnings year over year. We're going to be down over 5%. And they keep getting revised lower and lower and lower. So again, Walmart is flat right now, but it trades at 23 times forward earnings. The good news for them compared to Home Depot, who's projected to probably see their sales and earnings, are probably going to see them not grow year over year and trading 18 times forward earnings. But Walmart, you'll get earnings per share expected to grow 7% annually, which is probably on the high end of most companies. So 7% annual over the next 2 years, that's what's projected. We're also seeing sales, right? Top line growth of 3 to 4%. Again, those numbers are higher than estimates, so maybe they deserve a little bit of a premium. And not sure if it justifies a 23 times PE. But again, this is what we're seeing during earnings season. Companies being estimates that was sharply revised lower, guidance was not great, and most names are trading at very expensive valuations. That's why you need to be careful.